Well, it's incredibly good for crypto because the only way out, to Yago's point, once you're fully indebted, you got four choices. You can pay it back. Problem is, if you took everybody's assets, not their income, but everyone in the United States' assets, you couldn't pay back the debt. So that's off the table. You can restructure it, but someone would have to take the other side. And if we can't sell bonds at 100 cents on the dollar, I mean, we can't give them away. How are we going to get people to take 60 cents on the dollar? That ain't going to happen. So then you can default on it. What happens if you default on your debt? You're out. Politicians don't like out. They like in. So the only way out is to devalue your currency, to inflate away.
Hey guys, welcome to Everyday Finance. Officially, Bitcoin is headed for a collision with $1 million, which could occur as early as September 2029. According to Morgan Creek Capital Management's founder, CEO, and CIO, Mark Yusko, the road to seven figures isn't merely conjecture. Rather, it's founded on a distinct, recurring historical trend. However, Yusko claims that the true magic of Bitcoin's journey was not reaching $100,000, but rather $1. The world first acknowledged Bitcoin as money, a store of value, unreliant on governments, banks, or intermediaries, marking the transition from theory to reality. That breakthrough demonstrated that the technology was reliable and capable of transferring value without centralized control or authorization. Bitcoin has also had a rhythm since that crucial turning point, an internal heartbeat driven by halving cycles that reduce new supply every 4 years. Yusko notes that each halving has historically caused the price of Bitcoin to drop by zero. And if this pattern continues, we're approaching the point where approximately $1 million is not only feasible, but likely. The current cycle has already paved the way for Bitcoin to surpass $100,000, and as demand rises globally, supply contracts, and institutional adoption quickens, the next stage could be explosive. Economic uncertainty, the devaluation of fiat currencies, and the growing recognition that Bitcoin provides something that traditional markets cannot, true scarcity, transparency, and trust, will all contribute to the full maturation of Bitcoin as a global financial asset by 2029, according to Yusko. He breaks down the macro drivers, the halving-based timeline, and the crucial economic changes that need to take place between now and 2029 in order to reach that $1 million milestone in this video. Make sure to read through to the end if you want to understand how Bitcoin goes from around $100,000 to about $1 million, why the timeline is set in stone, and what signs to look out for. Mark Yusko lays everything out, and time is running out.
I keep coming back to this, that at the end of the day, all the things you talked about, Scott, that are going on in the rest of the world, and Yago talked about in terms of the non-correlative part of gold, that's all real, right? We are witnessing failed auctions of treasury bonds. That doesn't happen very often, and it's not a good thing. We're witnessing literally loss of control of interest rates in Japan. Clearly not a good thing, given they're the most indebted country in the world. And, you know, at some point, and we have lots of history, and I don't want to go here because it's a dark world. There is a point at which a country does lose control and you get a hyperinflation. And look, the world doesn't end. I mean, Germany still exists, but the people who lived in that time of wheelbarrows of Deutschmarks, life kind of sucked. And so if you happen to be alive during that period, it can be very, very painful if you haven't diversified out of fiat into these other things. And I think we're perilously close for the West. Absolutely. No, that's the point, Yago, is I'm not saying that we're going to have the total hyperinflation wheelbarrows like Venezuela, because as you really well pointed out, this reserve currency status that we are clinging to like with our fingernails, it's going away.
You even have Larry Fink saying that, by the way.
I mean, it is going away, and China has their eyes set on the prize. Everybody thinks it's going to be Bitcoin next. It's not. I think it's going to be the renminbi next, then ultimately Bitcoin, because it's going to take a while for reverse Gresham's law to work. In fact, Scott, you should sometime get Murray Stahl to come on this show.
I think you said that before.
Oh, yeah. No, Murray's, and I don't know if he does this kind of stuff because, look, I'm old. I just turned 62. Murray's even older than me. And the thing I love about Murray is, so he's like old school value investor, but he embraced Bitcoin early as one of the largest miners. I mean, he's a really interesting cat. But I say he's the only guy I've ever met who makes me seem bearish on Bitcoin. Like, I think Bitcoin's easy 500,000. Like that's not even hard. That's a cakewalk. That's a walk in the park. But beyond that, can we really take the whole global monetary system? He's like, Mark, are you joking? Of course that's going to happen. And he lays out an exact step by step why it's not like, to me, 10 trillion is like, it's done. That's the monetary value of gold. Bitcoin's better than gold. That's
it. Monetary value of gold is almost 30 trillion now.
No, the monetary value. Remember, half of gold is chalices and jewelry, and that doesn't count. I'm talking about the monetary value, the stuff that's in the central banks that is the base layer of money. And it probably is closer to 15 trillion than 10. But everyone talks about the total value of above ground gold. Well, your gold watch doesn't count. I mean, it's not. I mean, it could be used as money in a pinch, but really I'm talking about the base layer that sits in the central banks. And so that's easy. But Murray says, no. It's all of it. It's all 100 trillion of knowable wealth, because history says that bad money crowds out good. That's why it's called Gresham's law. And you see an example after Turkey, after Venezuela, after all the places where bad people get in charge and they hyperinflate because they get rich because they own all the stuff, and they impoverish their people, and then they stay in power because they promise the poor people little scraps like free electricity or gasoline. And that is gone on for actually millennia. Bad money crowds out good. But Murray will say, no. This time, because we have perfect money, good money will eventually crowd out bad. And it's a very compelling argument, particularly when he tells it.
Mark Yusko is reaffirming his prediction that Bitcoin will reach $1 million by September 2029, but he makes it apparent that this is not a given. It necessitates some important advancements that are currently in progress, but still need to pick up speed. The first thing that needs to change is the financial infrastructure, or the rails. Through intermediaries, settlement delays, and antiquated procedures that lead to inefficiencies at every stage, the current global financial system leaks trillions of dollars. As quicker, less expensive, and more programmable alternatives to fiat, stablecoins are starting to fill in those gaps. Despite their flaws, they are a huge advancement and a link between the fiat-dominated economy of today and the decentralized, asset-native future being constructed on blockchain. This is happening in real time and is no longer hypothetical. However, that is just one aspect of the situation. Yusko contends that Bitcoin must further establish its position as digital gold. That merely means that the current trends must continue and intensify. It does not imply a total reimagining of the market. This implies that more institutions are considering Bitcoin as a valid core holding, more capital allocators are accumulating long-term exposure, and the world's trust in fiat currencies is rapidly eroding due to inflation, debt, and monetary devaluation. Yusko asserts that the fundamental framework is already in place, and that none of this calls for novel ideas or significant adjustments to existing laws. Bitcoin has demonstrated its resilience over several cycles, and the foundations are being built underneath it to accommodate significant inflows of capital. The next step is execution, which includes more development, increased adoption, and a market that merely keeps up with the momentum that is already developing. If those circumstances materialize, as Yusko thinks they will, then Bitcoin's ascent to about $1 million is more than just conceivable. It is unavoidable.
These are defensive moves. The early ones were offensive moves. Now it's, and actually it's not even true. Remember MicroStrategy when it was still MicroStrategy?
It was defensive. He's
Remember
going to
why
protect his cash. Yeah.
protect the loss of value of his cash. And he thought that was, dereliction of duty if he held a lot of cash and it became less valuable. I tell a story that I had this very interesting experience where the aha moment for somebody. So I went to a Bitcoin meetup here in Durham, and the bartender, this very nice young lady, had been at the last one, and they were talking about, what is Bitcoin? She says, well, I don't really understand. He says, well, the guy said, remember all those tips that you made 2 months ago? She says, yeah. He says, do they buy more or less stuff today? She's like, oh my God, they buy less stuff. He says, if we would have tipped you in Bitcoin, they would buy more stuff. And she literally, and I'm not making this up, she literally went over and put a bar or a QR code next to the tip jar. And because someone helped her set it up. And because she had the aha moment. And so it is a defensive move for all these Bitcoin treasury companies that now there's the greed part, the Me Too. But ultimately, if we think about what's going on, and Scott, I have a little more sinister view of the Donald. Everyone thinks, oh, he's just an idiot. He doesn't understand tariffs. No, he understands exactly. There's only been really meaningful tariff use in the United States 3 times. 1828 led to a depression. 1930 led to a depression, and 2025. And since 1913, we basically had no tariffs because before 1913, there was no income tax. So the government was funded with tariffs. That's where his fundamental misunderstanding of history is bad. But he now is saying, well, I want to replace the income tax with tariffs. But it's the same thing. The people still pay the tax. You just call it a different thing because China isn't paying the tariffs. We are. So the problem here is you have to suspend the belief that you don't think it's intentional. And this is called the dictator playbook. If you're a dictator, you want to impoverish the masses and concentrate the wealth at the top with the robber barons. And there's a guy, and I wish I could give him credit, but he wrote a great piece on why Trump is bringing back the robber barons the same way they did in the 1930s and the same way they did in the 1820s. And that's the playbook. And it's not because he's a good guy. I'm sorry. Well, it's incredibly good for crypto because the only way out, to Iago's point, once you're fully indebted, you got 4 choices. You can pay it back. Problem is, if you just took everybody's assets, not their income, but everyone in the United States' assets, you couldn't pay back the debt. So that's off the table. You can restructure it, but someone would have to take the other side. And if we can't sell bonds at 100 cents on the dollar, I mean, we can't give them away. How are we going to get people to take 60 cents on the dollar? That ain't going to happen. So then you can default on it. What happens if you default on your debt? You're out. Politicians don't like out. They like in. So the only way out is to devalue your currency, to inflate away. And that is why we created the central bank in the first place. Because before 1607 or 1609, I don't remember the date, before the Rothschilds created the first central bank in the Netherlands. Remember, the Netherlands, no offense to anyone from the Netherlands, but it's about the size of like Ohio. How was that the global superpower for about 70 years? Think about that for a second. That's the only way is they would literally print money out of thin air and pay mercenaries to go, beat up all the other, strong armies around the world. So that model of central banking went from the Netherlands to the UK, from the UK to the US. I mean, do a little research on who JP Morgan's dad worked for sometime. It's kind of fun.
President Donald Trump puts more pressure on the Federal Reserve and calls for an aggressive full-point rate cut to boost the American economy, Bitcoin is once again on the rise. Trump put Fed Chair Jerome Powell under direct pressure in a daring Truth Social post, calling for monetary easing that, if implemented, could spark a new surge in riskier assets, with Bitcoin leading the way. The markets are closely monitoring this political economic struggle, particularly since the Fed has little reason to change course just yet based on macro data, like May's robust non-farm payrolls report. Bitcoin has recovered from recent volatility, including the media-driven conflict between Trump and Elon Musk, and recorded a 2.5% gain for the day despite the hawkish environment. Although there are indications of strength in the price action, analysts caution traders against becoming overconfident. A well-known market watcher, the Kingfisher, claims that liquidity maps reveal a risky area between approximately $99,000 and $112,000, which is full of lengthy liquidations that could catch unwary bulls off guard. Retail investors may perceive what appears to be support as a bear trap that is poised to set off a swift and agonizing liquidation cascade. This puts Bitcoin in a difficult balancing act, with political pressure on the Fed growing, a rate cut possibly imminent, and fresh bullish energy entering the cryptocurrency market on the one hand. Technical landmines, on the other hand, are just beneath the surface and indicate short-term instability and risk. Bitcoin is currently rising higher, but has a trapdoor right under its feet, creating a tense pocket of opportunity and danger.